What's up guys, this is Josh. Welcome to this new fresh video. In today's video, I want to take a moment and tell you how to invest in stocks. So, I've been investing in stocks for not too long, but I've been investing a little bit here and there every now and then. And there was a time when I started, I had no idea what I was doing. I didn't know how much money to put into stocks, what is buy, what is sell, when to hold, when to sell, and where do I get that information? So I've been doing this all through. I've been thinking about different things, understanding the concept, and finding out the platform where I could buy and where I could sell. So I figured all of that out a few years ago rather, and I've been putting that into place for a bit now. I've seen some stocks to actually grow. There have been some stocks that have been very profitable on, and there have been some losses, because that's how it kind of works. You have to make money and you have to lose money in stocks. It's just your main goal is always to make more than what you lose. That's how I simply put it down. So in today's video, I will tell you the basics, the few 2-3 fundamentals, and yes, you have to do your own research. You have to understand what stock you should invest in, why you're investing in the stock that you are, and understand the whole shalala, right? I do my own investigation on the stock. I'm like, okay, I'm gonna buy Apple. Why? Why am I buying Apple? Okay, I'm gonna buy Amazon. Why am I buying Amazon? Okay, I don't have $1,700 sitting around, so what else can I buy? Because I don't have $1,700 for an Amazon stock. So what am I gonna buy? Am I okay with the $400 Netflix, or am I okay with the $55, $56 Starbucks? I have to understand that. So there are 3 basic principles that I put in place. Number 1, know what you're selling, or know what the company does, right? So this is the main principle that I follow. I have to first understand what the company does. If I know what the company is really doing. So Apple, I know Apple makes computers, and I know how they make computers and what they do, okay? They're a very well-established company. They've been making computers, iPhones, iPads, okay? There's gonna be a new iPhone coming out, so that might actually influence the price of the stock and a whole lot more. Now, on the other hand, say there is some electronic company that's just coming up with something that I have no idea, and everybody's like buying that stock on a fad. I don't jump onto a fad and I'd be like, okay, put in my money. I don't do that. I would go ahead, spend some time, understand what that company does. And if I understand what that company does and it's simple enough for me to understand it, then I'm gonna go ahead and invest my money. I'm not saying this is the best way of doing it, but this is one of the ways that have always worked for me, because it makes it super simple. So if they're gonna launch a new Apple Watch 4, so I know this will actually either increase the price of the stock or reduce the price of the stock, or it's gonna play a role. And I know that if this is gonna be an amazing unit and it's something that has never been done before, it's completely different and revolutionary, it is gonna bump up the price. Now, AT&T is trying to buy other broadcasting companies, like in today's news. So yes, AT&T's price might differ, right? It's been falling for different reasons and stuff, but there are a whole another 9 yards that you need to understand. But if you know what they're doing, if you know what industry it is, and if you know what that industry does, you will be way more better off than just blindly buying something because someone at Yahoo Finance or someone in your office said was a great stock to buy. Now that being said, there are more reasons that I actually base the buy on. So first of all, what I like to do is I like to go into the stocks page and scroll down and see, okay, what is today's price? So say today's price is $150 for a random stock. And then I want to see what has been the 52-week high price for the random stock. So, okay, now the high price was like, say, $210. What is the low price for the 52-week? So if it says 52-week low price is like $140, and I've been seeing a trend for like the past 3 months, they've been kind of climbing up slowly, or they just took a little dip and now this is the dip. What I like to do is I like to buy then, because I know I have like a $20 margin from, actually it was $200. Let's say 52-week high was $200, and right now it's selling at $150, and the 52-week low is like $140. So I see like I have a $50 margin that I should go ahead and buy the stock, because 52-week high is a number that the stock has actually hit in the last 1 year, and that gives me a bunch of confidence in the stock, and I know the industry and I know the stock now, so I understand, okay, this has been the price, it has hit this number, so I have higher chances of making that money as the stock rises back again, because 52-week low is more like a bottom that it has actually hit in the last year. So if it was 140, I know if I'm gonna lose, I'm gonna lose close to 10 bucks. Yeah, it's not out there, it's not that sure, okay, this is gonna be the lowest number. It could be more than that, but you have understanding. And you know, if you go back and you say, okay, in February it lost $10 per stock, what happened? And you want to understand that, right? Because you'll be like, okay, they launched this product, it was a failure, or there were some reports about it that was a failure, or oh, Tesla was not able to do this, so that's the reason Tesla dropped down in prices, or just Facebook recently had a big issue about data breach and the data that got stolen, sold by, all of that stuff. So that kind of like brought down the price, and those are some reasons that you want to be sure of, right? So you go back and you figure it out. You'll be like, okay, cool, this is what's happening, and this was the 52-week low, this was a 52-week high, and this is what I want to do. And that is a very, very important thing to know. The next thing is, what are your major rules, or what is your major logic to invest in stocks? So you could be, when you say investing, you could be really buying stocks, you could be buying mutual funds which are on the stock market to buy, and there are different things that you could be doing. But what is your main intent? Is your main intent to day trade? Like, okay, buy at a low price, price goes up, I sell it, right? If you want to do that, you want to be sure that you're working with a broker which is not going to charge you an arm and a leg, and you're like kind of paying off more brokerage fees. You have to understand, okay, a stock was $100, my brokerage fees was $7, so anything that I sell over 114 would be my profit. Now you see what I'm saying over here. So you bought a $100 stock, it was $7 to buy it. It's going to be $7 to sell it. So $14 is your brokerage. So you cannot just sell it when it's 110. Whereas the broker that I personally use is Robinhood. Now, from the name, Robinhood seems like, okay, the good guy. No, it's a good app and I'll totally love it. And since I've been investing through Robinhood, I feel a little bit more comfortable buying and selling because I'm really not paying any fees. Robinhood is a 100% free app with which you could really buy and sell. You could buy and sell stocks for $0. Like, it takes you no fees, right? You have $100, you buy a $100 stock. You want to sell a $100 stock when it's 110? You made $10 right there. So I do recommend everybody who's like getting into the industry and like, okay, you're not looking for a lot more, go into Robinhood. It's a beautiful, very nicely put together app. Works on your iPhone 10, works on your iPhone, works on your Android. Now they even work on your computer screens right there. So it's amazing. I'm going to give you a little tour about how I buy and sell on Robinhood in the second part of this video. And there's another point that I almost forgot, but I want to also mention number 4. You need to understand they're going to be different stocks. So there are stocks which are pretty safe, right? They have a safe growth, good dividend, and dividend is the money or the profit that the company decides to share among the shareholders. And when you buy a stock, you're actually part owner of the company, right? Part owner would be like a real minute part because they might have 100,000 shares or 500,000 shares, and you might own one of them for whatever price, but that's how it kind of works, right? So you get that dividend and you could get 30 cents, 40 cents on a share or whatever, and it kind of piles up if you just leave it there. So you need to understand what is your intent. You need to first talk to yourself and be like, okay, what is my intent? Why am I really investing in stocks? And if you know your intent is to, okay, I'm going to buy stocks because my main goal is to buy this, hold it for another 5 years. Good. Then go ahead and look for stocks which are safer. Like for me, I would buy a Facebook, I would buy Apple, Google, Microsoft, Amazon, Bank of America, Chase, Visa. These are some stocks that I think I'm very safe with buying them, and I can hold back to them and they would like go through and I would really not lose much money. That's how I see it based on my research. And if you go around and look for them, they're like one of the best stocks that you could buy. Now, if you want to really go ahead and risk everything you got and be like, okay, I have $1,000, I want to put it into something that goes up like that, or might lose all its money. So on the other hand, if you decide, okay, I'm actually in the game to really make quick money, I want to buy today, I want to sell tomorrow, I want to buy today, I want to sell tomorrow, I want to buy today, sell it like 3 days later, or buy short. Shorting a stock is a whole other concept and I'm not going to actually discuss in this video. There are a bunch of other videos on YouTube that do discuss about it. but I'm gonna make another video soon in the future talking about shorting stock and how it could be beneficial and how it could really cost you a lot of money. But that being said, you need to understand what is the whole criteria that you're trying to do. So if you're ready to actually just make money quickly and you just want to flip stocks, you're going to be a day trader, right? In a way, you're trading daily. So you need to understand what stock you're buying, how much you're going to buy it for, how much you want to sell it for, what are the main basics. And you really don't have to know the industry then, because it really don't matter, because you're really not going to keep it for too long. But knowing the industry, you would know, okay, there's a new rule passed by the government, so it changes how the industry, like this industry is completely changed, and this is a television stock or a broadcasting stock. When everything is flipped, you'll be like, okay, look, if this is gonna be the new rule, the stock price is gonna fall down because they're not gonna have enough access, and boom, now you know what you could do with that stock. So that's how it kind of works. But just be sure, don't always run for bigger profits, because bigger profits, bigger gains also come with bigger risks. But if you want to do it, I always recommend having your portfolio at a 75-25. 75% in safe stocks that you know the industry, you know what you're doing with the stocks. You can leave them there, not ready to sell them tomorrow. It's not the income that you really want to get back, and we'll leave that to focus. And 25% of that money that you have in stocks, you want to be like, okay, cool, I'm gonna use this money to just play around. So you're trying to do like some quick gaming with it, right? You put in the 25% of whatever money that you have in stocks, and you're trying to play around with it and trying to build some risky business and do some risky business and build some cash flow and learn as you go. So these are the few things that I do recommend doing. Now that being said, I'm going to tell you and show you how the Robinhood app looks. So it's pretty simple. If you do not have a Robinhood account, I do highly recommend having a Robinhood account, and it's free. And if you use my link, which is in the description, the first link in the description, it's gonna actually make you an investor already. It will get you a free stock, so you will already have a stock by not even doing anything, which is crazy, right? And say you decide to sell it tomorrow, what happens? You get $5, $6, $7, whatever it's worth. So it's like free money sitting right there for you to take. And I do recommend doing that for yourself. So thank you so much for watching this video, and I'll be making more videos like this and about what I do, what decisions I make, like with stock market, what decisions I do with marketing, and there's going to be much more content coming soon. Thank you so much for watching this video, and if you're interested in anything e-commerce, anything entrepreneurship, marketing, and finance, do subscribe to this channel so I can bring you good content all the time. Thank you so much. Take care, peace, and bye-bye.
But I don't feel like I've won. I wanna forget you, but only time will heal. Too late to erase the bad we've done. I wanna forget